Have you ever wondered if the flow of money in the global economy could secretly control the price of Bitcoin? Could M2 liquidity, the broad measure of money supply, be one of the hidden forces driving crypto markets? Today we're going to dig deep into this fascinating connection and uncover whether M2 really has a grip on Bitcoin's price, or if it's just another financial myth. So, what exactly is M2 liquidity? Simply put, M2 measures the total amount of money circulating in an economy. It includes physical cash, money in checking, and savings accounts, and other assets that can easily be turned into cash. Think of it as a giant pool of money available for spending and investment. When this pool grows, people and businesses usually have more money to spend or invest. When it shrinks, borrowing becomes harder, and markets tend to slow down. Now, why should Bitcoin investors care? Because money, supply, and investor behavior are tightly linked. When liquidity is abundant, investors feel confident to put some of that extra money into riskier assets like stocks, real estate, or Bitcoin. But when liquidity tightens, say because central banks raise interest rates, investors often pull back, moving money into safer assets. Bitcoin, being one of the riskiest but most exciting assets, often reacts strongly to these shifts. Let's look at some real-world examples. During the COVID-19 pandemic in 2020, governments and central banks unleashed unprecedented levels of stimulus. Trillions of dollars were printed and injected into the economy. M2 liquidity in the United States shot up at its fastest pace ever. What happened to Bitcoin? Its price exploded from under $10,000 to more than $60,000 in just over a year. Many analysts see this as a textbook example of how liquidity can drive Bitcoin prices higher. But history also shows that the relationship isn't always so simple. So, does that mean M2 is the magic key to predicting Bitcoin? Not exactly. Critics argue that Bitcoin's price is influenced by far more than just liquidity. Factors like adoption rates, technological developments, institutional demand, and government regulations can all dramatically move the market. For instance, when El Salvador adopted Bitcoin as legal tender in 2021, or when U.S. regulators approved Bitcoin ETFs, these events drove prices and investor interest completely separate from M2 data. Another important point is that M2 doesn't just affect Bitcoin. It influences all kinds of assets. When liquidity is high, stock markets often rally. Real estate prices climb, and gold sometimes benefits as well. Bitcoin may follow these trends, but because it's still relatively young and volatile, its movements can sometimes overshoot or undershoot what liquidity data would suggest. Some experts suggest thinking of M2 as a background force rather than a direct controller. Imagine the economy as an ocean. M2 is the tide. When it rises, most boats, including Bitcoin, are lifted. When it falls, boats sink lower, but at the same time, each boat is different. Some are big and steady like the stock market. Some are defensive like gold and Bitcoin. Well, Bitcoin is like a speedboat. It reacts faster and more dramatically to every wave. One interesting aspect to consider is the role of global liquidity. It's not just the U.S. money supply that matters. For example, when China eases credit or when the European Central Bank launches stimulus programs, global investors may redirect some of that liquidity into Bitcoin and other cryptocurrencies. This means Bitcoin isn't just tied to one country's money supply, but to worldwide financial flows. If central banks eventually shift from tightening to easing, we could see a new wave of liquidity entering markets. That could boost risk assets, including Bitcoin, just like we saw in 2020. On the other hand, if inflation remains high and central banks keep money tight, Bitcoin may struggle in the short term no matter how strong adoption trends are. So what's the bottom line? M2 liquidity definitely plays a role in Bitcoin's price movements, but it's not the only factor. It sets the stage for market conditions, influencing investor confidence and risk appetite. But the actual performance of Bitcoin also depends on regulation, adoption, technology, and global events. If you're trying to predict where Bitcoin is heading, you can't just look at M2. You need to connect multiple dots. To sum it up, M2 liquidity is like the weather. It creates the overall environment. But Bitcoin's journey depends on many other factors, like who's steering the ship, how strong the engine is, and what obstacles lie ahead. By keeping an eye on both liquidity trends and the bigger picture, investors can gain a much clearer understanding of Bitcoin's future. So, what do you think? Is M2 liquidity the hidden driver of Bitcoin, or is it just one piece of a much larger puzzle? Share your thoughts in the comments below, and don't forget to subscribe. In our next video, we'll explore how global economic shifts, from inflation to interest rates, are shaping the future of the entire cryptocurrency market